In this video, I'm going to show you guys what simple moving averages look like and explain why they're important. I'll then explain different simple moving average settings for different time frames. And I'll finish this video showing what the Bollinger Band study looks like and how it can be used to make better trading decisions. Looking at this daily chart, you can see there is no real easy way to determine which direction you think price may go. It may go up, it may go down, or it may go sideways. One way to increase your chances of being right in picking the right direction is by using simple moving averages. These simple moving average lines will often cross each other or touch at different points, indicating that price is moving or is about to move in a certain direction. This may give you a greater chance of making a profit. A simple moving average is simply a line connecting points that average the closing prices for the last several bars before it gets drawn on the chart. You can change the settings for the simple moving average study for how many bars and which color to draw the line. For example, if you choose to add a white 10-day simple moving average to this daily chart, it will draw a white line on the daily chart that takes the previous 10 days, takes the closing price of each of those days, adds them together, and then divides them by 10. I often use more than one simple moving average on my charts. For the daily chart, I use a 10-day simple moving average colored white, a 20-day simple moving average colored blue, and a 50-day simple moving average colored red. So for every time frame, I generally use 3 simple moving average lines with simple moving averages set specifically for those time frames. For the weekly chart, I use a 5 simple moving average colored white because there are 5 weeks in a month, a 30 simple moving average colored blue because there are 30 weeks in 6 months, and a 52 simple moving average colored red because there are 52 weeks in a year. For the hourly chart, I use a 3 simple moving average colored white because there are 3 hours in half a trading day, a 15 simple moving average colored blue because there are 15 hours in half a trading week, and a 30 simple moving average colored red because there are 30 hours in a trading week. You can do a search on simple moving averages to get a more in-depth idea of what settings you would like to use for each time frame. You may find that by adjusting these settings to different numbers that it fits your personal trading style better. For example, for the hourly chart, you could also use a 1 simple moving average colored white, a 3 simple moving average colored blue because there are 3 hours in half a trading day, and a 6 simple moving average colored red because there are 6 hours in a trading day. Changing the simple moving averages here would allow for quicker movement better suited for actual intraday day trading. 2 other important daily chart simple moving averages commonly used by many financial entities are the 50-day simple moving average and the 200-day simple moving average. When these 2 simple moving averages cross at certain times, they may indicate a bullish or bearish trending opportunity. So you will be using simple moving averages in the daily chart to look for key stock or option buying or selling areas. You will also review the longer weekly chart time frame for overall direction strength or weakness confirmation, and you will review the shorter hourly time frame for continuing price movement direction or price reversal confirmation. This will be covered more in depth later in the series. The following chart is an example of simple moving averages we just talked about. Look how the candlesticks for each day move up and down over the simple moving average lines, in addition to how each simple moving average line moves up and down over the other simple moving average lines. This constant movement of price in relation to the simple moving averages and the constant movement of the simple moving averages in relation to each other is one way to look for opportunities for buying and selling shares of stock and call or put options. I'll elaborate more on how to use simple moving averages for profit later on in this series. The Bollinger Band study offers several ways to find profit opportunities. I'll skip the technicalities of what the Bollinger Band study is and simply illustrate how to find these opportunities. The price on many stocks moves very randomly, and yet at times it still behaves in ways that, while not exactly predictable, can at least provide an increase in the chances of you being profitable. Notice how on this daily chart the direction of the candlesticks bounce up and down inside the Bollinger Bands. And you'll notice that at other times the candlestick direction will slide down the bottom Bollinger Band, and it will climb up alongside the upper Bollinger Band. This will look similar on weekly charts and hourly charts. It doesn't matter the time frame. Price bounces around all time frames in different ways. All price change happens because all of the market participants, from professionals to novices, are buying and selling based on many different reasons and many different trading styles. So what are we looking for with the Bollinger Bands? If you see the candlesticks moving toward the upper Bollinger Band on this daily chart, you should take note that if it hits the top band, that it can reverse and start heading downward. If the candlesticks are moving upward and the top Bollinger Band starts expanding upward, then the candlesticks can start to ride up alongside the top band before reversing and coming back down. The same goes for the bottom Bollinger Band. If the candlesticks are moving toward the bottom Bollinger Band, you should take note that if it hits the bottom Bollinger Band, that it can reverse and start heading upward. If the candlesticks are moving downward and the bottom Bollinger Band starts expanding downward, then the candlesticks can start to slide down alongside the bottom band before reversing and heading back up. As you can see here, you can use the simple moving averages along with the Bollinger Bands to get a more complete picture. We will go more in depth with simple moving averages and Bollinger Bands and when to buy and sell stocks and calls and puts later on. In the next video, I'll cover the basics of the MACD histogram and stochastics. But for now, click subscribe and leave a thumbs up.